Up, Old Mutual has announced the launch of Old Mutual Wealth. That's an advice-led wealth management business. Now, according to Andrew Bradley, that's the CEO of Old Mutual Wealth, the formation of this new business is in line with the company's vision of becoming South Africa's most trusted partner in assisting South Africans achieve lasting financial freedom and well-being. We know there's a lot of regulatory changes as well in South Africa. So to unpack how this is affecting the financial sector, we've got Andrew Bradley joining us from Cape Town. Andrew, thanks for joining us today. So let's just start with the kind of structure of Old Mutual Wealth. What old businesses are included in that from the Old Mutual group, and how will that fit within the broader structure of Old Mutual?
Well, it's a combination of a number of businesses that Old Mutual have had in this sector. Businesses within the organization and some acquisitions that have been made over time. So Old Mutual had a number of different propositions that it had taken to the market and a number that evolved over time. So we had a good look at what we were doing and how we were doing it, and also took a good look at what we foresaw in future with regards to where the regulatory environment would go, as well as our vision as an organization to be a client-centric organization. So we've pulled all these businesses together. There were 7 in total, and they now form the core of what is called Old Mutual Wealth. So some businesses that you may be familiar with in the past, you might have heard of Fairburn Capital, the Old Mutual International business, Celestis, Symmetry, Access, to name a few of them. So they all now form part of Old Mutual Wealth.
So let's talk about the regulatory environment here in South Africa and the push to, of course, ensure that its clients' needs that come first. I mean, what's your interpretation as to where regulation is trying to ensure that the financial sector goes?
Well, I think there's no certainty that our regulators will follow what's happened elsewhere in the world. However, to date, there's been a very, very close correlation with what has occurred elsewhere. So we already know that our regulators are going to be introducing the treating customers fairly regulations shortly, and that is a fairly profound change in a number of respects. We've also seen the retail distribution review in the UK and the future of financial advice regulations in Australia. And I think in most instances, the clear move is towards a more transparent, client-centered financial services industry, where the advisor in particular is acting in a fiduciary capacity to their clients rather than being an intermediary of a product provider. So I think some fairly fundamental changes, and certainly no guarantee we'll go there, but I think from our perspective, wanting to be future fit, and most importantly wanting to be client-centric and putting the client at the center of what we were doing, we decided that was the appropriate route to follow.
Is it a tough change for Old Mutual to make? I mean, to bring all these groups together which have previously been operating semi-independently, is it tough to be able to bring them all together under Old Mutual Wealth and implement perhaps a change in mindset to what people have been doing in the past?
Well, I think in any instances where you bring businesses together that might have a subtly different culture and environment, there are obviously some aspect of change, and for many of us, although change happens every day, it can be tricky in some instances, but certainly from my perspective, I'm delighted with the progress that we're making. I think what has been very, very encouraging is that everyone has bought into the philosophy and the principles by which we are going to be running the business, and I think that has certainly ignited a strong passion amongst all of us for what we are trying to achieve. So from that perspective, it's been fantastic. I think in the fact that we're changing from a product and distribution business to an advice-led business is again a subtle but not trivial change. And I think in a number of respects the nature of the roles that people perform need to change, your mindset, your approach does change, but for us to be at the forefront of where we want to be, we need to make these changes, and we are making them. In our opinion, we are going to be very successful in doing this.
Mm-hmm. How will that ensure, from a bottom line perspective for the company, that you'll be able to continue perhaps making, the kind of, I suppose they're all different independent groups to a degree in terms of earnings, but they'll be able to maintain the type of earnings they will with a slightly different approach? Or do you think that regulators are obviously trying to crack down on the amount of money that people make in this business?
Well, I think regulators aren't necessarily trying to crack down on the amount of money. I think what the regulators are really wanting to do is making sure that clients get value for money. And that's something that we've looked at very hard, and ensure that one of the key aspects in the financial services industry is that scale is important. And if you look at the collaboration of these various entities and businesses coming together, there is so there are a number of areas where we can get the benefits of scale, so that can and will reduce our costs, improve our efficiencies. But I think the most important aspect that we're focusing on is the value add to the client. And in that instance, we believe we're going to add significant additional value to our clients above that which we already have. And that will ensure that we attract more clients and add more value, and therefore, from a viability point of view, it will certainly be a very, very viable proposition for us in the market.
Mm-hmm. I mean, your experience right now, how the demands of the clients changing, how they're changing to what they were, say, 5-10 years ago, and how is that also being filtered into your strategy right now?
I think that's probably the most significant aspect that we've focused some time and energy on, at two significant levels. One is that we're all living longer lives, and for that, within South African environment where we don't have a strong social security network, we need to make sure that we have adequate provision in our retirement. So, 20 years ago, when someone retired at age 60, your life expectancy wasn't much more than 10 years. Now we're looking at 20 to 30 years. And to make sure that you've got enough capital to sustain that is not a trivial undertaking. So the seriousness of that, the significance of that needs to be looked at. And I think the second aspect is with choice, the complexity and diversity of what is available, and the demands on our time and finances have also increased substantially. So our research has indicated that for most of us, we are making really poor financial decisions. An example, our debt levels have increased substantially. Mm-hmm. Our savings levels have reduced remarkably. And probably the biggest indictment of the lot is that while investment markets have performed well, most investors have failed because they've gone into the market at the top and got out at the bottom, and they keep repeating that cycle. So the nature of the work that we're going to be doing is very, very strongly centered on behavioral finance, understanding human behavior, how we can assist and support them to make the right decisions so that they achieve their objectives over time.
Mm-hmm. And I suppose there's, the element there that goes far beyond just being that CA, having that underpin of financial knowledge. If you're looking at the type of people you're looking to employ right now, so how are you bringing that element of behavioral finance into your training, perhaps, and into your hiring processes?
Well, yes, I think in this area, just being able to crunch numbers is important because you've got to get those right. But I think that's just the ticket to the ballpark. The key issue is taking the next steps. So we have an extensive training program in that regard, and what we've also done is worked with some of the leading authorities in this area around the world and got their input, guidance and support to make sure that we are at the forefront of this in the country, and making sure people are aware of these subtle dynamics in the fact that they can and should prevent this wealth-destroying behavior.
Mm-hmm. Let's talk about Africa, because Old Mutual has certainly said more and more in recent times that they're looking to focus on opportunities in the continent. So how does Old Mutual Wealth look and fit into that, and what type of opportunities are you seeing right now in terms of extending this kind of advice-led approach to the continent and to those in the type of income brackets that you see looking for it?
Well, our main focus will be on South Africa for the next year or two, and once we've achieved what we wanted to here in the wealth space, we'll be looking at expanding where it is appropriate into Africa. My colleagues in the rest of the Old Mutual Group are doing fantastic work in the rest of Africa in their market segments, so we're keeping a very close watch on them and engaging with them and watching the progress that they make, and then on the back of that we'll explore those opportunities. But right now our focus is South Africa, and we've got more than enough on our hands in that regard to ensure that we achieve what we want to there.
And I suppose also, as you say, just ensuring a seamless coordination across the business units that are all coming together right now. Let's go back to that point that you made about South Africans right now and the changes that we've seen, living longer, people taking on more debt, not saving enough, and I suppose more importantly, potentially not investing enough. So if we're talking about financial freedom and you're wanting South Africans to achieve that, this is something everyone always discusses. What exactly does that mean to you?
Well, for us, it's making sure that the financial planners and wealth managers that we work with can sit down within the framework that we've put together, that they can understand exactly where their clients are right now, what financial resources they have in place, and even at the most trivial level of understanding what comes in every month and what goes out. And then looking to the future, saying, well, where do they want to go, and what aspirations do they have in terms of their lifestyles into the next year, 3, 5, 10 years, and beyond that into retirement. And then looking at the resources to live that lifestyle. So once we have that very, very clear picture, and for each and every one of us it's different, we then need to say, how do we get from A to B? And some of the trade-offs that we need to make, in some cases people need to save more, in other cases people need to save more aggressively, and sometimes, although they have the aspiration to eat well, they don't necessarily, with the way that they need to invest, are they able to sleep well. So it's getting that balance between eating well and sleeping well right. So the trade-offs we each make will be different. And I think the key thing is having a very strong foundation of how we get from A to B, and making sure that the investment portfolio that's then put together gives us the greatest certainty and probability of achieving that outcome.
Thanks for joining us today for that. Andrew Bradley, CEO of Old Mutual Wealth. Appreciate your time.